Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. Economic data coming out of China may show that the world's second largest economy is not growing as quickly as first thought, but that doesn't seem to be hurting the price of oil. Since late June, the price of oil has increased about 30% to more than $83 per barrel. Why the bullish sentiment? Even though interest rates are at a 22-year high, investors are increasingly optimistic about the prospect of U.S. economy. And they believe that the economy could pull a soft landing, or there are some who even believe that there won't be any recession at all. In July, oil prices booked their biggest monthly gains since January 2022 and the best July performance in almost 20 years. John?
Yeah, it hasn't all just been about a soft landing, soft economic landing, or avoiding a recession. Oil prices are also being energized by resilient demand for oil and production cuts from OPEC+. So as a result, U.S. oil production is expected to rise by nearly 850,000 barrels per day this year to a record 12.76 million barrels per day in 2023. Crude oil production is expected to rise by an additional 330,000 barrels per day to 13.909 million barrels per day in 2024. The last record output was 12.3 million barrels per day in 2019 before the COVID-19 pandemic crushed demand and prices.
Certainly those numbers are, a lot to digest, but suffice to say, it's all good news for today's income pick. Antero Midstream Corp, traded on New York Stock Exchange under symbol AM, a company we looked back in mid-May. How has Antero Midstream been doing since then, John?
Exceptionally well. The company has maintained its ultra-high yield dividend payout at 0.225 per share, or 90 cents on an annual basis, for a current yield of 7.53%. Antero Midstream stock is doing fairly well too, up roughly 16% since we looked at it back in May.
If you don't mind, give us a little bit of a refresher on Antero Midstream.
As the name implies, Antero Midstream is a midstream company that owns and operates energy assets serving gas production into the lowest cost natural gas and natural gas liquids basins in North America. This includes the Marcellus Shale and Utica Shale, both found in the Appalachia regions of Pennsylvania, Ohio, and West Virginia. The Marcellus Shale is an unconventional reservoir that produces natural gas liquids, and oil, and is the largest and most prolific unconventional natural gas reservoir in the U.S. It produces nearly 35% of total U.S. natural gas supply, actually, and its current inventory is in excess of 20 years. Antero operates through two segments: a natural gas gathering and processing, and water handling. And won't hit you with too many numbers, but the gathering and processing segment includes 494 miles of gathering pipeline, 3.4 billion cubic feet per day of compression capacity, and 40,000 barrels of natural gas processing capacity through its joint venture with MPLX. Its freshwater pipelines and storage facilities support the operations for Antero Resources in the Marcellus and Utica. The freshwater delivery system includes 35 plus miles of freshwater pipeline, 18 million barrels of freshwater storage, and 100,000 barrels per day of wastewater recycling and reuse capacity.
We earlier touched base on oil and gas prices remaining resilient. Now, bring in Antero in this. How is this company doing financially now?
Well, thanks to long-term fixed agreements, Antero has been able to report continued strong results. In the second quarter, revenue increased almost 13% year over year to $258 million. Some other numbers: net income increased 6% to $87 million, or 18 cents per share. Adjusted net income grew to $105 million, with earnings per share up 10%. Free cash flow before dividends was up 31% at $139 million. And free cash flow after dividends was $31 million, compared to a $2 million deficit in the prior year quarter. And this is the fourth consecutive quarter in which the company generated free cash flow after dividends. And most significantly was the fact that free cash flow after dividends improved by $33 million from the second quarter of 2022, all of which positions Antero to achieve its 2023 guidance. In the first quarter, management actually raised its full year guidance and expects to report net income in the range of 355 million to 395 million, which is 15% higher than previous guidance. Adjusted net income of 410 million to 450 million, which is a 15 increase from previous guidance. And free cash flow before dividends of between 550 million to 590 million. And that's a 35 million increase at the midpoint of prior guidance as well.
What about the dividends here?
Well, thanks to the company's long-term fixed service fee agreements, Antero Midstream has a steady and reliable revenue stream and predictable cash flow. As already noted, in May, the company's board paid out a quarterly cash dividend of 0.225 per share, or 90 cents on an annual basis, for a current yield of 7.53%. That high yield is not a fluke or a result of a crashing share price. Antero actually has a long history of providing an ultra high yield dividend. The current trailing annual dividend yield is 7.53%, and the 5-year average dividend yield is 12.40%.
And now let's talk a little bit about Antero stock as well. How is it holding up recently?
Well, yeah, again, as noted earlier, Antero stock has been doing exceptionally well. In fact, it hit a new all-time record high of $12.14 per share on August 9th. That represents a 16% gain since we last looked at the company in May. More broadly, Antero stock is thumping the broader markets, up almost 17% over the last 3 months alone, and 18% year to date, and 32% year over year.
John, thank you so much for your analysis. Just to recap, Antero continues to be an excellent energy stock with a great balance sheet and reliable high dividend. In the first quarter, it reported outstanding operational performance and continues to raise its guidance for 2023. The momentum continued in the second quarter, driven by double-digit year-over-year throughput growth. All of this resulted in 10% year-over-year adjusted EBITDA growth, and more importantly, its fourth straight quarter of generating free cash flow after dividends. For readers of IncomeInvestors.com, Antero Midstream stock continues to provide ultra-high dividend of 90 cents per share per year for a current dividend yield of 7.53%. That's more than double the current rate of inflation, which is at around 2.9%. Antero stock is up 16% since we last profiled in May. And thanks to bullish sentiment for commodities, the outlook for Antero remains solid for 2023 and beyond. That's it for today. We'll be back with another video soon, so stay tuned. But in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.